Hey everybody, Tyler here from Seller Accountant, and a question that we get all the time at Seller Accountant is, can't I just book the Amazon deposits? I mean, they come in through the bank feed. I get a deposit from Amazon every few weeks, or depending on how old my account is, maybe more often. Can I just hit add and make that net amount the sales number for for the purposes of my bookkeeping? And I think, if you guys have interacted with any of our content before, you know that's absolutely not acceptable in our mind here at Seller Accountant. But I want to give you a kind of a clarified example of why that is. And so what you can see here on our screen is a P&L, a profit and loss statement with month A and month B. I've got 2 months of data here. And these red boxes are going to represent some important data points. So, we've got sales in month A versus month B. And then once you take the refunds out and that kind of thing, you have kind of these net sales numbers, right? You got 29,000 and change. You've got almost 29,000 between month A and month B. When you look a little further down, now your cost of goods sold, you're going to be booking separately. But there are some important fees that come from Amazon, right? All the pick and pack related, kind of logistics related fees. And then the second category here is kind of your commissions and other expenses. I think Amazon has something in the neighborhood of 80 different potential fees that you can get. And they need to be clumped into at least these two kind of categories. That's going to leave you with kind of a gross profit, right? And then gross profit is meaningless in an Amazon business without understanding how many advertising dollars you had to pump into the business in order to get your portfolio of products to move. And so these are the numbers that really give us a clear, clean picture of the profitability of our business. So let me show you these in a little bit of a different form here. I've just put them on a little spreadsheet. All right. Same data set here, by the way. Try to get to where we can see both of these here. Let's see here. All right. Wow. The spreadsheet is the most important part. So again, these are the same 2 months. Our total, quote unquote, total sales here, right? That was the amount that we had after refunds was about the same. This is only about $400 difference between the two of them. But if we failed to tease out our FBA fees, our commissions, and even more importantly in this particular example, our advertising expenses, you'll notice that the actual deposits, now I'm realizing I'm stating this on a monthly basis instead of on a 2-week basis, but the example plays true through any kind of accounting system. If we could somehow magically have Amazon just pay us once a month and we just booked the deposit, these two deposits for month A versus month B would have actually been almost identical. It's $150 on 12 grand. You and I would have looked at these two deposits and we said, okay, month A and month B were almost identical in terms of our performance, right? We would have been almost equally happy with the performance of this first month versus the performance of the second month. The problem with this, though, is that once you took into account, let me blow this back up a little bit so we can see it a little bit better here. Once you take into account the cost of goods sold, and if you look closely at these two example months, we actually sold a lot more goods in the second month, but had a whole bunch of refunds, gave away a whole bunch of promotional rebates, had more cost of goods sold as a result, and had more FBA fees because we actually moved more product. In other words, we got the same kind of net sales, and then after Amazon fees and whatnot, we had roughly the same deposit, but our performance was radically different, right? So, and you can kind of see this intuitively. Our gross profit is a lot better in the first month versus the second month, but it's even worse than that, right? Because we spent over $1,000 more on advertising. So if you kind of have an advertising, after advertising profit number here, you're looking at profitability. That's what this post-advertising gross profit number is here. After ads, we were way more profitable in the first month versus the second month. So much so that we have a post-advertising gross profit of 24% in month A. That's really good. That's pretty close to our industry average for strong, healthy financial sellers. And in month B, we had a little less than 16%, which in my mind is so low that if we had this number happen month after month, we would want to be looking to convert our product blend to another product. That's how poor 16% profitability after ads is if it's over a long period of time. And so it's extremely important as the seller, as the CEO of my company, that I can look at the data points and understand what happened to make these profit numbers be so much different. But wait, what if it was even different? What if you, this is just one more layer that makes it so important to tease these fees out and not just book the deposit. What if that month A actually included a final payment for an Amazon loan? Because you got to remember, for a lot of sellers, not only is advertising flowing through that distribution that comes from Amazon every 2 weeks, but a lot of times they're taking their monthly Amazon loan payments through that same payment. And so instead of getting the $12,198, what if you actually only got that minus a $2,500 payment? Think about this. If I'm a seller and I'm comparing my 2 months, and I didn't choose to deal with my Amazon loan payment, I'm going to think that month A, I only made a little less than 10 grand in cash coming in. This was a really bad month. Month B, I'm going to be like, wow, my cash coming in from Amazon was 12,000. That's a quarter more. That's crazy. That's awesome. That's really, really good. But it's not awesome and it's not really good, because what we know if we actually look into the profitability numbers is that month A is the month you should be excited about. Month A is the month that we should say, let's do more of what we did in month A. Month B is the month where you should say, okay, whoa. If this happens in the future, if I have to continue to give away these kind of promotional discounts, if I have to continue to eat this higher level of FBA fees, then I may need to take a close look at my product blend. Or if I have to continue to spend, $8,000 a month in advertising instead of a little less than $7,000, I may have a problem with my business. I may be seeing a dashboard red light come up that says I need to fix something. My point with all of this is to say it is absolutely crucial not to just hit add when you have a deposit come from Amazon. You've got to split that deposit. You've got to take the deposit and tell your books where it needs to go. It's got to be split so that you can have this level of visibility. I would also argue that it needs to be split on a month-by-month basis. You can't afford to just take the 14-day deposit from Amazon, hit the split button within QuickBooks Online, and just split it, because some of these sales may have happened in June, and some of them happen in July, some of them happen in August, that kind of thing. You've got to clarify it so that when you look at your financial statements, at your books, they are kind of like having a clear windshield. You can really see the world around you. You don't want them to be a muddy windshield, because here's what we do as entrepreneurs. Again, we ignore warning signs if they're not clear. And so I just want to say that's just if you're looking for a clean, clear argument for why you've got to split those deposits up, here it is, not to mention the fact that you can't sell a business unless it's split properly. Take care.